Well, alrighty then. Good morning, everybody. Good morning, trade pros. Welcome to our morning market update for Wednesday, May the 22nd of 2019. This is George Papsov, Trade Pro Academy. Hope you are all having a phenomenal day. We have a lot on the docket to talk about today, so let's get rolling with the update and let's get started. First and foremost, we want to talk about a morning market fun fact, and I don't know how much fun you're going to have with this fun fact, but the U.S. average national rent climbed 3% year over year in the month of April, and 0.3% from the prior month um, of March. So there's a growth in the average national rate, and it's climbed to $1,436. The top rent in the entire country is in what city? Do you guys want to know? The average rent is the highest in which city in the United States? Pop quiz. Let's see if the trade pros can guess it. I can't see the YouTube comments, but you guys put it in there. Anyways, and I'll check it out after. It's kind of fun. No other reason. San Francisco. That's what I thought too. San Fran. Christopher, boom. New York. So New York was Manhattan, that part of New York, is $4,130 a month in April 2019. San Fran was second, 3647. Boston, 3357 in third place. Brooklyn in fourth place, also New York, 2878. San Jose, 2720. Los Angeles, 2471. Pretty nuts, right? We know New York's a very expensive place, and it's number one in the city for that scale. All right, that's the morning market fun fact. Thank you guys for chiming in. This morning, we wake up to renewed trade tensions after Donald Trump and his administration threatened to put the ban of technology on 5 other companies, or 4 other for 5 in total. So he's considering expanding this ban to other Chinese companies like Hikvision, which is a really big supplier of surveillance equipment, cameras, etc., microphones, and surveillance grade technology, which would include Huawei and Hikvision and 3 other companies, which are leaders in video surveillance. And on that news, the Dow Jones is down 64 points. All right, Shanghai futures are down 0.5%. And we don't really know what China's response is going to be to all of this. And so despite the fact the markets are dropping on these actions, we don't know how China's going to come back. We do know there's going to be a retaliation of some sort. We don't know what it is. All right. And I think that's the part the markets are more nervous about. Not the knowns, but the market fears more the unknowns. That's the part that it's more afraid of, rather than the damage that we do already know of. In today's meeting, or in today's day rather, in the afternoon, we have the Federal Reserve releasing their latest meeting minutes this afternoon at 2 p.m. With most members on the board that have already spoken, and 4 of them speaking today, I think we're going to get all the details before these meeting minutes. All right, unless somebody lies on their conference, in which case it'd be silly, because we're going to see the meeting minutes and they're going to confirm it anyways. So I don't think there's any surprises today. I think it's going to probably be a non-event, to be perfectly honest with you. There'll be some volatility, and I don't think there's going to be a runaway one key takeaway that everyone's going to start buying or selling off of. I just think it's going to confirm the norm. All right, interest rates are going to stay lower for longer. They're going to be more patient. That patient word is the one you got to watch. Patience, patience, patience. Just about every Fed speaker said that in the last 6 weeks. They've drove it home. All right. What we want to see as traders here is how much consensus was there at this FOMC. Are they in consensus, or is it a wreck and Jerome Powell just had to take a side on one side or the other? All right. If Jerome Powell shows that there's consensus and he represents the consensus of the Federal Reserve, there isn't going to be much news. All right. If there is a diversion, if hawks are obviously dissenting, doves are dissenting as well, it could cause some reaction. And I don't really think it's going to be that much of a bombshell report, to be perfectly honest with you. We're going to trade it together in the elite room. We'll see what we get. We're going to be prepared for opportunity, but we're going to also expect to just keep it tight and stay around range. All right. Eric Rosengren today, or yesterday rather, said that the downside risks to the U.S. economy are enough to convince him of more patience required on the policy. Again, patience. James Bullard yesterday said that the rate hike in December may have slightly overdone it, which also means patience. No more rate hikes, no more rate cuts. Jerome Powell said there was no strong will to move rates in either direction. Patience. All right, patience, patience, patience. On today's calendar, we got a few Fed speakers. 10 a.m. Fed's Williams is speaking. 10:10 Fed's Bostich is speaking. 10:15 Fed's Kaplan speaking. And at 2 p.m. we have the FOMC meeting minutes. All right, so those speeches will probably have just as much importance as the meeting minutes in the afternoon, if not more. All right. In other news this morning, Qualcomm takes a beating pre-market, down 11%. This happened after U.S. District Judge Lucy Koh made a decision that sided with the FTC, a former charge from the Federal Trade Commission, FTC, which initially sued Qualcomm back in January of 2017. And Judge Koh found that Qualcomm violated antitrust laws by charging really high royalties for its patents. Here's the interesting part. They actually charge chip royalties as a percentage, or not as a percentage, but in correlation to the price of the phone. So if your phone is priced higher, you're going to pay more for the chip rather than fixed pricing. That's been their business model. Qualcomm, they just got served an L on that. It loses the antitrust laws test, and we're going to see what happens. They're down 11% pre-market. And this really puts in danger their whole business practice. Not just one lawsuit, the whole business practice of pricing things according to the price of the headset that will sell is in danger. All right, that's their whole model. That's a shakeup investors were not expecting. Down 11%, still up from the settlement that they won with Apple and that lawsuit. All right, that's Qualcomm. Yesterday, at 4:30 p.m., we're going to switch to oil. I told you there's a lot to talk about today. We saw API oil inventories and crude oil come out at 2.4 million build versus 8.6 prior. Build in all categories, but less than expected. That was the oil numbers from yesterday. Today at 10:30, we see the Department of Energy's report. It's going to be super important. Oil inventory is really fun to trade, very predictable, very opportunistic. In 1 hour of one day, you can make your whole weekly income trading oil inventory. That's today at 10:30. Join us. We're going to trade that live in the room. Super excited. All right. That's what we got on oil. Slightly down at the moment. We traded down to 62.05 on the lows. We opened at the 62 quarter, so just off of the overnight lows. There's some more inventory to the downside. I think oil continues to slide into the 61 range. Retail apocalypse. Yesterday, a lot of retail companies got crushed. J.C. Penney down 7%. Kohl's down 12.3%. Nordstrom down 9.3%. TJX companies flat. Urban Outfitters down 6.2%. All right, really bad earnings releases for the retail sector. So look for the ETF XRT for some more downside. I think there's going to be selling across the retail complex. XRT could be primed for some put options. All right, crude oil, as we said, down slightly. Gold's flat. Bitcoin is down slightly as well, below 8,000, but not down much, below 8,000. In Asia, Japan's flat. Hong Kong's flat. China's down 0.5%. India's up 0.4%. In Europe, at midday, London's up 0.5%, Paris 1/10, Frankfurt 0.3. So modest gains to losses, from modest losses in the Asian session, modest gains in the European session. Nothing notable. In the U.S., equities are still down 0.3% across the board, and 10-year Treasury yield is flat. All right. News today, once again, Fed's Bullard already spoke at 1 a.m. 7 a.m. we had mortgage applications from the MBA. 10 a.m. Fed's Williams. 10:10 Fed's Bostich. 10:15 Fed's Kaplan, and that's going to be a super important hour from 10 to about 10:30. Look out, equities are going to experience a surge of volatility. All right, 10:30. After the equity volatility, we switch over to get some oil volatility. We're going to be spoiled today. This will be a great day. I feel it. And then 4 p.m. Fed's Bostich is going to speak after FOMC meeting minutes. All right, great day of volatility up ahead. I honestly can't tell you that sell rallies or buy dips. It's not as easy today because a lot of the news will impact at the projection of where equities are going to go. What I can tell you is before 10 a.m., keep a tight lid on it, take some opportunities, but trade less size, take profit quicker. All right, don't be as greedy, tone it down a notch. You're going to have a lot of opportunity, and more of the opportunity today is towards the middle of the day to the latter half of it rather than the beginning. All right, so we will see volatility from the U.S. Open to the European close, the first 2 hours of trade, but really the majority of traders are waiting for after that to start doing a lot of the activity. So watch closer to the European close today rather than on the U.S. Open. It's my only advice. Start off keeping it small, and if volatility comes in, scale up accordingly to take advantage. All right, take care, trade pros. Manage your risk. We'll see you guys tomorrow. And if you want to trade with us, today's one of the best days to join the room. There's a lot of volatility. Elite members, we're going to trade together for the FOMC meeting minutes and extended hours from 11 to 12. So basically taking a 1-2 hour break, and we're trading the whole day together. So it should be really exciting. See you guys later. Take care, and have an awesome day. All right, trade pros in the trading room. Let's rock the show. We got a lot of opportunity today, and we just got to set up the right levels. I'll show you the levels for S&P 500 where the risk is worth it for me, where support and resistance is, and I'll pass it over to Steven to do oil. And then when Marky gets in, he'll do the Dow. All right, I'll see you guys soon. Let's start, rather. I'm not going anywhere, don't worry. Let's start. I'll start off with the S&P 500 update and some key levels and analysis for you. So let's jump